Hello everyone, welcome to another video. In this one, we're going to be talking about a price action review of today's price action. So today's price action would be that of the 11th of December, 2023. So I'm telling you guys, you do not want to miss this one because there's a lot of things that's going to go over your head. And I'm telling you right now, the guys that are not going to make it past the first minute or the second minute kindly get lost. Now, for the guys actually gonna stop watching repackaged ICT bullshit, right? You guys can watch this, learn something new, and then apply it to something that you already know. Okay, I'm telling you again, if you want to learn proper ICT stuff, go watch it from ICT's YouTube. Okay, go and watch the damn thing from ICT's YouTube, not anyone else's. Okay, now if you want to go beyond ICT, if you want to come outside of ICT, I'm your boy. All right, so moving on. Today's price action, we were looking for gold to sell off. Okay, now in looking for gold to sell off, I had one thing in mind. I was thinking, okay, you know what? When price was drawing lower here, I was thinking, okay, maybe this could be the manipulation for price to go up, but that's not the case. Okay, because once this is happening, once all this is happening, once I see this stack sell side, it's reasonable to assume that yes, okay, fine. Maybe trade above this, it becomes an order block. Sure. Okay, but here's the thing. I need to wait for price to form the London fractal dealing range. That's from 310 EST to 330 EST. It's the box that I've drawn over here. Now, if we break above that box, then retrace into a fair value gap variant, then yes, you can look for longs. But that's not the case. Now, the only way in which we can actually deduce and the only way in which we can actually look for price to go low is by using my fractal time theory. Like I said earlier, it's a principle, right, at this point. Okay, so everything suggested lower prices. So anyways, we were bearish to begin with. Okay, this is a fake out. So in order for me to confirm that yes, this is indeed a fake out, I need to see price do what? I want to see price break down below the London fractal dealing range. And after that, I want to see price reject the fractal dealing range. Okay, I want to see price reject the fractal dealing range. Yeah. Okay. And then once I know, or rather once I understand that this is going low, but I of course knew it was going low. We all, every single day when we're looking at price action and the mentorship, we know that price is going, we know what the price is going to go up or the price is going to go down by this point. Okay. Even before the London session starts, we know the price swing that's going to occur for the day. All right. Now, sorry, in this case, we knew we are going to go low. So I'm looking for price to come back into the fractal dealing range after we broke down below it. And I'm looking for price to reject and go down. Fine. Now, moving forward, when we look at this price swing from this low to that high, what is that? That's your manipulated range. Okay. Now, if you've been watching my YouTube for a while, if you've been here since day one, you know about my manipulated range concept. When price breaks the manipulated range, we're using the manipulated range itself to look at the valuation of price. So we're looking at the 50%. Okay, so we are looking at the 50% of price at the manipulated range in order to consider shorts, if you were to use that. All right. Now, when we project this outwards, one standard deviation, that's your partial taking point, and two standard deviations, that is the end of the move. You're not looking for anything else after that. You got the sell, you knew it was a sell, you're done with the day. Okay, and later on, if there's a buy, you can go for the buy. But in order to keep your mental structure balanced, what do I mean by mental structure? I mean your discipline. If you want to keep that balance, if you want to live to fight another day, take this sell, stop. That's all. Okay. Now, moving on, when we consider the actual entry point, can you see up over here, we have the 7:30 a.m. Eastern Standard Time opening price. That is the actual opening price for the New York session. It is not 7 o'clock. It is 7:30. Okay. As we rallied up here, yeah, we mitigated the London fractal dealing range again relative to the New York Open. We dropped. Can you see how this wick that mitigates the London fractal dealing range, right? It wicks into it. That's your external range DeMarker. You can sell price over there. You can keep your stop loss above this candle, and you can enjoy a high risk to reward move. Now, me personally, I like to add 5 to 10 pips for, in case of spread, in case stuff opens up. I like to add 5 to 10 pips, but if you are a daredevil, go ahead. All right. Now, we are revisiting the rejection of the London fractal leading. So that is your entry point. Your external range DeMarker. Your target is going to be, as I mentioned earlier, the 2 standard deviations of the M30 projection. And you're going to take partials around here at 1 standard deviation just to make sure that you take something out of the trade. Because there's always a possibility that while your target is absolute, there is always a possibility that price is going to just wick back up into your break-even point and then go back down. Okay, so just to fight that off, you can take partials at 1 standard deviation and then let it go, because every day is a trading opportunity. You have unlimited opportunities every single day. Okay, all right. Finally, we look at things using the what? Doubling theory, power of 3, projection. Okay, what do we have? The first interval was your manipulation. How? See this here, this big down close. Okay, this wick in this down close candle is an up close. Okay, this wick in this down close candle is an up close candle on the lower time frame. So that up move led to the filling of this gap and the drop. So if we form a swing point after mitigating this candle, that makes this guy stack liquidity. Now, for you guys that don't understand this, because there was a few comments that said that you all don't understand liquidity quite as well, I will do a video on this. Okay. Now, what happens, or what would we expect price to do, or rather, what would we anticipate the price phase to be when it takes out stack liquidity? What is it? When price takes out stack liquidity, yeah, and when it starts to close below this candle around here, that is a change in the state of delivery. So once you understand that this is a change in the state of delivery, you will know that this is a manipulation, because we went up into liquidity and now we are selling off. That means the next stage is distribution. That is why I'm so confident in saying that, okay, if we did trade above this down close candle on the 5-minute chart, I'm not considering it, because when a distribution phase. So if the previous phase was a manipulation to the upside, then the distribution is going to be obviously what? Distribution to the downside. And we're going to seek liquidity on the left-hand side from far away, long time ago. Okay, so simple as that. That's why I opted to go short over here, get the projections, and finish the day off over here. Right, so when we're trading, guys, remember, we need to always have a mental structure in mind. Mental structure is key. Okay, I will do this, I will do XYZ, I will give 2 opportunities, I'll give 2 chances for this trade idea. If both of them fail, I'll come back tomorrow when the probabilities are high again, so on and so forth. ABC 1, 2, 3. I hope you found this insightful. I'll see you in the next one. Good luck and good trading. Bye-bye.